Thank you. We now come to the backbench motion on the Coronavirus Business Interruption Loan Scheme. Owen Thompson to move.
Thank you, Madam Deputy Speaker, and could I also thank the Backbench Business Committee for allocating time for this important debate today. My co-sponsor, the Honourable Member for Duavar Meredith, and I applied for this debate some months ago after hearing anguish felt by business owners in our constituencies who could not access emergency support and were left struggling to find critical funds to see them through the crisis. I know colleagues from across all parties in this House and all parts of the UK will have heard similar tales. People who didn't know where to turn when the billions of pounds they heard being brandished about were no more than fantasy figures, doing nothing to help the reality faced by the businesses they had worked so hard to build. The situation has been in constant flux and the support schemes have been a movable feast or a never-ending famine for certainly those who have been excluded so far. So I want to reflect on the current situation and dangers going forward rather than dwell too long on some of the errors of the past. The fact is that a rising tide of debt is making the Coronavirus Business Interruption Loan Scheme an issue again. Changes to the scheme that have been announced by the Treasury so far don't go far enough to see businesses through to the end of this crisis. The pandemic has gone far beyond anything imagined when CBILS was first announced, and England begins lockdown again today. Most of Scotland remains severely restricted. The feared second wave is upon us and possibly worse than the first. Debt and desperation is rising, yet at the same time support is being cut, withdrawn or very reluctantly extended without due time to plan or prepare. Those excluded remain so again. Banks are getting more tetchy about lending, and there's never been a more crucial time to review the effectiveness of government-backed loans and support and to make sure we better meet the needs of everyone across the UK. When lockdown began, CBILS was one of the very first schemes out of the block, with a promise of £350 billion being made available in this and other government-backed loans. And while grants would certainly have been better than loans, I commend the Chancellor for that swift action. It's a pity now, though, that after 7 months, £62 billion, less than one-fifth of that figure, has actually been approved via the various loan schemes. We need to find better ways to make funds accessible to those who need it, and hope bold replacement mechanisms for CBILS and the Bounce Back Loan Scheme, with an emphasis on grants, it can be found. Absolutely. These would plug the gaps in the support already in place and would help to stimulate recovery. Flaws in the CBILS scheme quickly became apparent. It was reported on the 12th of April, only 3 weeks after the scheme was launched, that 300,000 inquiries had been made, with only 1.4% of those going on to be successfully approved for loans. Some didn't pursue loans beyond the call to the bank, others gave up before completion of the heavily bureaucratic process. Some 7 months later, and on the 18th of October, 73,094 companies had been approved for a CBILS out of 159,277 completed applications. And that's still an approval rating of less than half of those who completed the process, never mind those too worried about the debt to take it on in the first place.
I'm very grateful. I can thank him for bringing forward this very important debate. Although there have been some successes with CBILS, it's fair to say, there are some shortcomings too, and he's right to bring this debate forward so we can discuss about them. He did mention grants rather than loans, and again, I accept that to a great extent, but probably he would accept there have been grants as well as supported loans in the form of job retention scheme and the business rate grants.
I absolutely do. I absolutely do accept that point, and I think it's important that some of those grants have been there. I would far rather have seen some of this, the large sums of money that are available through CBILS and the Bounce Back scheme, making those sort of sums of money available as grants as opposed to the loans which add to that debt burden of business.
I'm also grateful to the Honourable Member for bringing forward the debate. 94 businesses in my constituency have taken out a CBILS loan, but they're really concerned now about the ability to pay back, even with the new measures put in place. Does he not share my concern that we need to see some underpinning underwriting in order to secure these businesses for the future?
I absolutely do, and some of the points I'll come on to later hopefully will address the point the Honourable Lady makes. While improvements were made, the mechanics remain flawed, and it doesn't help take up at the state guarantor is only 80% of the loan. So risk-averse banks are the gatekeepers to lending decisions. Initially, banks were cherry-picking the very best, the blue chips and the big corporations, while lending to the rest was far harder to find. Now we see a second wave of banks becoming less willing to lend as the uncertainty of the crisis continues and worries grow about the ability to repay. We need the government to step in to fix this. Of course, getting cash to smaller firms was aided by the launch of the Bounce Back scheme in May, and again, I commend the Chancellor for taking the action to introduce that. It's a faster process, with a far greater take-up, accounting for around 2/3 of the total loans received, with around 2/3 of those reaching small and medium enterprises. This is aided by the government guarantee of 100%, the capped interest at 2.5%, and the lender agreeing not to charge fees. This is far closer to what I think the CBILS scheme should be if it can't be a grant. And it's a pity the bounce back loan does remain limited to loans of up to £50,000, which is nowhere near enough for the needs of many businesses around the country. I do hope the replacement for CBILS will take account of the mechanics of the bounce back scheme. By contrast, the commercial companies approved for CBILS are able to set the rates for business interruption loans. There's a massive variation in what's offered, averaging around 6%, but going to almost 15%. One local business told me of their initial experience when the initial rate they had been offered was 34%. That may bail out companies in an immediate cash flow crisis, but it will lead to crippling debt in the longer term when the taxpayer support ends. As the Sunday Times reported this week, some CBILS accredited lenders are not only charging double-digit interest rates, but the arrangement fees they're charging are up to 5%, a considerable sum to any business. Some are apparently marketing the loans as ways to fund management buyouts or to refinance existing debts. It looks like some of these loans are less of an emergency support and more picking the bones off a company in trouble. COVID-19 has certainly brought about the best and the worst in our society. We've seen the very best in our public spiritedness from our communities, essential workers, volunteers and small businesses struggling to keep things moving, supporting the vulnerable and saving lives. The very worst, though, is those who see the pandemic as an opportunity simply to make a quick buck on the back of other people's struggles, whether through price gouging on hand sanitiser, creaming off cash from shadily signed government contracts for PPE, or in this case, hiking up fees and interest on loans to desperate companies. There are always people out there who see a disaster as an opportunity to make money, but they should not be able to do so with a government badge of approval. Many companies are not taking on a CBILS or a BBILS loan because having more and more debt around their necks is the very last thing they need. SMEs in Midlothian told me it was an absolute last resort. They felt the schemes were far better suited to big players. They say they needed short-term financial injection, not a loan, but businesses were being pushed towards it as the only option. One local business who contacted me put it in a way that I think is far better than I could have put myself, stating, "Business owners are being unfairly expected to shoulder a massively disproportionate share of the burden. Many SMEs have been built up over years of toil and are supported by personal guarantees of directors who are being pushed into positions of potential or actual insolvency, which can lead to personal bankruptcy. This is all at the bequest of people in authority who are at no personal risk at all. Are they aware that these businesses, where the tax receipts come from, that they will be needed to pay back the debt being built? Many of them took years to build into a position where they pay and collect good levels of taxes, and if these companies are forced to fall, it could be many years before their replacements are able to build." I do hope the Treasurer Bench will take note of the comments made in that sense. In May 2020, the Office for Budget Responsibility forecast a likely 10% default rate on loans. By July, that was updated to 40%. In September, the BEIS annual report went even further, estimating losses could range from 35% to 60%. The City UK Recapitalisation Group's report estimated UK businesses will have £100 billion in toxic debt by 2021, with £35 billion of that related to the government schemes. The report warned that up to 3 million jobs across the UK and 780,000 SMEs were at risk if urgent action isn't taken to tackle this projected 35 million of unsustainable debt from COVID loans. Worryingly, these are reports of banks bringing in specialist debt collectors to help lead the recovery of loans. Of course, the loans spare the banks from the credit risk, but if they can't be repaid, we'll witness thousands of small family businesses being pursued through the courts for recovery before the guarantee kicks in. The National Audit Office report into the bounce back scheme published on the 8th of October stated that bank expects lenders to pursue appropriate recovery processes if companies default. However, it's not clear what this actually means, and the UK Government needs to provide clearer guidance on that process. Given the funds were provided in terms set by the Treasury, it's only fair that as a minimum there's a clear framework for recovery so that customers are treated fairly, consistently, regardless of the banking provider. Yeah. Even better, why not take the stress off the shoulders of small business and dump the debt that will only hold back recovery? There are also small businesses facing bigger debt on their loans than others because they rushed to take out the loan when it was the only game in town. They could face a 50 or 60% increase in repayments compared to a bounce-back loan. It doesn't seem like the banks are particularly keen to make it clear they're able to switch these loans, and I hope that the Government can help to get this message out there, that one simple step at least could make a big difference to so many companies. As the pandemic crisis continues, and companies strive to adapt and rebuild, the best thing the Government could do is to write off the outstanding debt to SMEs altogether. Yeah. This would help small businesses have room to recover. The Association of Accounting Technicians called for the bounce-back debts to be written off for small businesses, accounting for 40 billion of loans. They say the pay-as-you-grow scheme doesn't solve the problem, it just defers it, while writing off the debt would be a much-needed boost for SMEs and the economy.
I'm grateful to the Honourable Member giving way. Charities have been pushed in the direction of CBILS as well, and of course that's completely inappropriate. So to add to the list, will he also say that charities should have their debt written off as well?
Yeah, I think this is in many ways charities who spend so much of their time having to collect from the public and are now having to adapt to new ways of doing that are amongst those many who have been pushed into an impossible situation where the only game in town is what they had to take, and we do absolutely need to look to see what we can do to support them to help out of this.
I'm very grateful. It's an interesting point, but if you wrote off the debt, how would that be fair to people who didn't take a loan or to businesses that paid back their loan if you wrote off the debt of those that didn't? How could that possibly be fair?
But I think obviously each business took its decision about what position it was in at the time. Many businesses would face the prospect of going out of business, which would be the heart of our communities vanishing overnight, and actually one swift step by the Treasury could solve that to support and maintain our communities.
It's an interesting point. It's worth having a debate about it, but lots of businesses, including my own, and I draw the House's attention to my register of members' interests, took loans on the basis of a safety net. Not alone they didn't need to get through, they were unsure about the commercial circumstance of the ensuing months, and they'll be able to pay that debt off without going bust, and they intend to. Are you intending to write the debt off to my business, which I didn't need, the taxpayers funded, and I didn't need that money on the basis that everybody should just get free money? Is that what you're saying?
As I say, every business took their own decision about why they needed to take a COVID loan or a bounce-back loan, and actually this is about making sure we protect the jobs and security for these businesses going forward and making sure that our communities are protected.
Grateful for my honourable friend for giving way. He's been making a really powerful speech, and on this point, would you agree that actually what we've seen from businesses across the nations of the UK is when they've not needed public funds, they've returned the money in the many millions, and wouldn't that be exactly the same circumstance we'd be calling for here?
Absolutely, I completely agree with my honourable friend. This is about ensuring the security and the future for thousands of businesses across these islands. Writing off the debt for businesses, it is a bold move, I accept that. But we're in a crisis, and bold action is exactly what's needed.
So, my friend, give way. I wonder whether there might be consideration given to certain sectors, because we know that sector specifically, that there are areas such as tourism where they have been able to make no money over the summer whatsoever. And could this be a medium by which that could be addressed?
I think that's an excellent suggestion. I mean, tourism, events, there's a number of industries who have no opportunity to make the income that they need at the moment, and who, looking forward, there is no immediate prospect of them being able to do so, which is where the threat of these loans becoming due for repayment really starts to come into its own. The Government, when considering a replacement for CBILS, does need to look at ways to use the remainder of the £350 billion promised to be released on direct grants, perhaps the equity, and make sure it reaches those who actually need it. There are many viable businesses who have received nothing so far, and they are not going away either. This is an important day to hold this debate. November the 5th isn't just the beginning of the new lockdown in England, it commemorates the date of a failed gunpowder plot. Let's make it a day to properly remember and not leave a giant powder keg sitting under the businesses across our nations. We must make sure our businesses survive and our democracy works for the people who are supposed to serve. I urge the UK Government to act now to prevent a debt crisis, to boost support for businesses and to stop more jobs and livelihoods going up in smoke.